Hey everyone, this is Rangadad. Not financial advice, just the way I'm looking at the market. Back into the new week. Just having a quick look at the NAS. Had a pretty flat Friday there. Obviously, the gap up on the actual NASDAQ was massive. It doesn't surprise me to come back into that a little bit, but you would be expecting this gap to close, so back into the 19.335 area at some stage. Whether we do it this week or not will be interesting to see. FX Evolution had a whole heap of stats over the weekend about what this could mean around seasonality and all that sort of stuff too. Kind of, it's a bit of a coin toss either way from here, to be honest. But looking at the futures, like we are closing above that Gaussian channel. That's a very good sign. The EMAs are postured to the upside now. Just get rid of the pi cycle. You know, the 50 and the 20. I think that's what I've got on there. Yeah, 2050. So they're pointing to the upside. We are getting to the point of being overextended on the daily, and stochastic momentum is quite high, but it does have room to move too. Like when the stochastic momentum is in the bullish control zone, it's hard to be short. Once it clears that, once it actually breaks below the bullish control zone, then yeah, short's not a bad play. Okay. So that is just something to keep in mind. Like here, if you had it held until it broke outside the bullish control zone, then it would have been a pretty good sell. So definitely not bearish on the market yet from that perspective. S&P 500 is pretty similar. Let's go to ES. Again, breaking above, it's actually new all-time highs anyway last week. So it's, again, pretty tough to be bearish when your chart looks like that. Pretty good turnaround there. Closed the week at all-time highs. Stochastic momentum's up, coming off a fairly low volatility too on the weekly. So that there, overall, you're talking probably a bit more of a run to go, but whether we get a bit of a pullback first, we'll have to wait and see. And what I'm kind of expecting is something more like this. If we do break below that bullish control zone, it may not be for very long. You know, pullbacks might be a bit more sideways, more of a pullback in time on this next run up. So yeah, just keep that in mind. Closures below the bullish control zone while you're still sort of above the 50 EMA are probably going to still be reasonably bullish. So this one here, that close there was actually above the 20 EMA. So you got to be a little bit careful when you are going on a bullish run. And again, there's apart from the economy being completely shit and we're just waiting for the trigger, there's no signs at the moment that we should actually be bearish, at least in the short to medium term, like the weekly sort of time frame. IWM had a bit more of a correction, but still okay. Futures are bouncing a little. Yeah, it's, again, they're all pretty similar, the markets at the moment. Generally, you wouldn't be seeing high banking sector if the economy was completely rat shit. XLY, XLP is sort of going with it as well. Still a little bit to run on the volatility. ITB's still strong. DJI Gold still hasn't broken to a low. VIX is coming down. You know, it's all pointing in the direction of, okay, it's not too bad. The only signal here is the skew's come down a little bit. I certainly wouldn't see that as a skew crush. Just a little bit of a pullback. If we see another day of skew pulling back and the market goes up, then you've got to be probably a little bit more worried. So I have to wait and see, but doesn't look too bad at the moment. There is global liquidity being injected still at the moment, so that's on the rise, and we still aren't at levels that we have been in the past. So I think overall the Federal Reserves around the world have a bit of room to move with QE to sort of support the market a little bit. And we've only just started cutting rates as well. So Chinese seeing 50 still maybe finding a little bit of a bounce here. If that does clear the bearish control zone, then that would be potentially a good thing because the Hang Seng is looking pretty good, coming off a decent base here. You'd be looking for basically maybe a couple more days up and then a pullback into here and then off. So basically we want something like this into that. That'll be a resistance level somewhere around there. And then probably a pullback down into the 17,800s again before going higher. And then you're sort of talking maybe 19,500, 19,600-ish as being a target over the next couple of weeks to months. Japanese market. Yeah, similar sort of potential bounce here. Now, we do want to keep pushing above and break to a new all-time, or not an all-time high, but break to a new high, and then potentially pull back and go again. But momentum's up. It's just crossed above, or it looks like crossing above the volatility line. So potentially, yeah, a couple more days up before a little pullback. And I think pullbacks will be met with buying demand. TLT is still chugging its way up. May come back down into the 97.5 before bouncing again, but in general, nothing to really worry about. High yield was still up on Friday, so yeah, I'm not too worried about this market at all. As long as that's still going up while the market's going up, then that's pretty bullish. But yeah, there's probably a little bit more to run on these before we see a decent pullback. And October is probably historically a pretty good month for a bit of a pullback, and then run up into the election. But again, we've been talking run up into the election for a while now, and we've been getting it. But you do, with any run, you do want to see some pullbacks. But you only really want to see around 5% or so. All right. The 10-year still coming down. So the 10-year has been bouncing a bit, the 2-year not so much. So I think both of them will probably find a little bit of support around here until we get the next rate cut decision. You know, there's no real reason for them to keep dropping at the moment. I think the market's pretty well priced in the rate cuts for the time being. Copper, good move, new high. So any sort of pullbacks potentially into the 420 mark. That would be a good bounce point for copper, and again would support the run up. But yeah, if we get a couple more days up on the general markets, you would expect copper to sort of break above that Gaussian channel there. But it is obviously at a resistance level at the moment. Gold going strong still. Silver is going strong as well. Probably not as strong as I expected. It's sort of on par with gold at the moment. It's been sort of moving similarly, but if this breaks out, which it should, that's a pretty good basing pattern there. If we break out of here, then silver's going to be the one that'll give you the biggest percentages. Just wanted to keep an eye on. Oil, good bounce. Again, I think pullbacks will be met with buyers, but at the moment, momentum's to the upside. Even volatility's started to expand again, so wouldn't surprise me if we keep going on oil. Dixie's really, it does look like it's actually finding a base here. And with Japan keeping their rates on hold for another month, US dollar could see a little bit of a pump in here, but ultimately stochastic momentum is to the downside, and we are increasing in volatility. The volatility is just sort of confirming above that trend line at the moment, or the smooth line, signal line. That's the word I was looking for. So Aussie dollar, euros, okay, Aussie dollar, US. So it looks like the Aussie dollar may be playing a part in that carry trade at the moment. Confirmed above, well, kind of confirmed above the 800 EMA, which was the key level to break here. If we can stay above that, then should go on a pretty decent run, I think. Probably need to break this level here, which is 68. Let's call it 69 cents. Good level. Break of that, and we'll be up into the low 70s. Which, if that happens, obviously the US dollar would probably break that parity level, or the 100 level, and be moving back down into the 98s. Money supply is still high, still increasing. So yeah, there's still a bit to go on the global liquidity. There's definitely more that they can put in if they need to. This is the average house prices in Australia, still up. I don't know that I've got a new read on these yet. Just trying to think, when do they? The debt balance of auto loans is still going. Yeah, you want to see a pullback in this before you'd expect. It tends to actually follow a recession, I think. Where's the one that leads it? Yeah, debt balance credit cards are still going up. When was that read? June. It looks like, yeah, every quarter. So the end of this month. We should get another read on these, so that'll be an interesting one. I think it's the same here. Yeah, so end of this month, there'll be some key economic data, I think. Watching the credit cards, house prices, auto loans, things like that. Looks like it might be starting to roll over in the US, the Schiller home price index. So that'll be one to watch out for. But yeah, see how we go. That was obviously, it rolled over well before the actual recession in the US. So that'll be a good indicator for us as to how long potentially there is left in an up market. Percentage stocks above the 50-day average. Pull back a little bit, but again, bit of room to move here. But this is sort of suggesting that, yeah, maybe only a couple of weeks left of upside before we get a pullback. Mag 7 held strong, new high. Tesla had a good week. It's probably going to find a little bit of resistance here, but it is bullish control zone as well. Aussie market has opened up. Oh, it hasn't opened yet. 15 minutes it opens. I mean, it's still in an uptrend. Broke to a new high, new all-time high as well last week. So you would expect pullback to be met with buying demand, but at the same time, we did get some pretty shitty data today. The services and the manufacturing PMI were both down quite a bit. So that might weaken the market, might give us a little bit more of a pullback, but we'll see what happens. Not really trading much of the Aussie market. So and then we come into Bitcoin, and Bitcoin's pretty well hovering. Stochastic momentum's still quite high, which surprised me a little bit, given we've sort of flattened off here. But we did get a buy signal on this bullish smart money indicator. Volatility's come back a little, which you'd kind of expect with it going flat, but it's kind of in the middle. So volatility could go either way here. If we pull back more and come back into that value area low, then volatility will sort of reset a bit. But at this stage, it seemed to be happy with this retest of this 62,500-ish level over the weekend. I did expect it to hold a bit lower and actually come back down a bit more, but it might be suggesting here that we go on another little pump up on the shorter time frames. Like even the hourly, you look at that candle there, that was a massive candle. This here just looks like a retest of the vector candle at this stage. Got 9 minutes to go in it. Could we pull back more? Yes. If we go even shorter time frame, this here was a massive fake out. Generally, when you see a big fake out, something happens really quickly and it reverses quickly on volume. Generally, that's the start of a pretty decent move in that second direction. So in this case, to the upside. It does look like it's trying to decide whether it is going to pull back more or not. If it does, you're sort of looking at maybe back into the 63.3, which that is another key level in here. So 63.3 if we look at, let's go to this one. So there's a bit of liquidity here that it might be looking to go to. There is a decent order there, 100 BTC, which is 63,400-ish. Is that? Yeah, 63,431. Looks like it might, okay, that just disappeared, so maybe not. Just refresh this. There is a decent order there though. 327 and a bit of liquidity here. So there is still decent liquidity down to the 61.5 mark. I don't know that it would want to go down into that 60,900 to 60,500. I think there's just too much interest to the upside at the moment. If we go into the 24-hour, the reason I said 63,300-ish is we've got a decent amount of orders coming in there, and it's cleared some of the shorter term stuff. So I still think maybe in the next hour, so the first hour after the close of the daily candle, we're potentially going to get into that 63,250, maybe a little bit lower, but at the moment, generally it's hard to be bearish on the Bitcoin chart at the moment. There is a good bit of liquidity to the upside, and your 64.5 is a pretty critical level. Not just because of the liquidity that's there, but if we come back in here, 64.5 would pretty well clear a big volume area. Closure up there on the daily would be a new higher high, effectively. But essentially, to be really bullish, you want a good daily closure above, realistically above 64. Let's call it 65K even. Closures above that, and even 65,600 even, which would be the wicks on this little block here. Very good level to be clearing. Now, again, we are overextended though, so closures above those levels could be met with some pullback, some taking profit. And then in which case your key levels from that point are just going to be the value area low at 60,500. If we break below that, then I'm going to be fairly bearish, I would think. But there's a fair bit of support. There will be more support around that point too. Your moving averages will be coming into that sort of level. So it's kind of a bit of an indecision, couple of candles over the weekend. But in general, hard to be bearish. In fact, I think we've got a decent run to come. I have a feeling, like looking at this, you'd kind of be expecting the 67,500 this week, if not more. So yeah, I was surprised over the weekend that we didn't really pull back into the liquidity that was in this sort of area, at least into that 61,500. It looked like it was going to do it this morning on that 1 hour candle there. It was moving down quite aggressively on decent volume, and then just this massive order block come in here, or the massive amount of orders, and just ripped it to the upside. So yeah, very hard to be bearish with that sort of thing in there as well. So it looks like pullbacks are being met with buyers at the moment, all along here. That's about it. Yeah, Solana did something similar. See, the altcoins did pull back a bit more into their liquidity, into the key regions. Solana even nearly tapped the 200 EMA on the hourly, which would be a key support level. So unless it's just going to be really choppy over the next week, it kind of looks like everything wants to base here. But yeah, Solana did close negative yesterday on the daily. Let's have a quick look on the daily. Yeah. Still a pretty decent sort of candle. We may have another down day. Like, you do prefer to see confirmations of breakouts of EMAs, particularly 200 EMA on a daily. We haven't had that confirmation yet, at least not on the daily time frame. So even though, like here, obviously it broke, ripped for another 2 days, and then took over a week to actually reconfirm that level. We could do the same here, but that there, you'd almost consider that a retest. But it's just stochastic momentum still so high. A retest on low stochastic momentum and low volatility is kind of more what you want to see to be really interested in a decent upside. So yeah, it looks like we could get some choppy markets. Generally, my bias is up, but maybe a little choppy before, and even down in October, at least at the start of October, before we get a run up. But generally, historically, October's been a pretty good month for Bitcoin, even if it hasn't been necessarily for stocks. So that's about it for today, I think. That's about all I had for you. Have a good week.